Hello my dear future charters. I am Professor Anand More, your guide to CA career. In this video playlist of solution to CAFC December 21 accounting paper by More Academy, we have already solved first 5 questions with all their sub questions as one question, one video. If you haven't checked the earlier videos, I would recommend you to subscribe to this channel and then to check the playlist for CAFC December 21 solution. Please like and share these videos with your friends to help them perform better in examination. Also give your suggestions and opinions in the comment section. I'll incorporate the best of suggestions in my next videos. Now in this video, I'm going to discuss question number 6a. It is from the topic of issue of shares. Let us go ahead to the question. Question number 6a. Fashion Garments Limited invited applications for issuing 10,000 equity shares of rupees 10 each. The amount was payable as under. On application, rupee 1 per share. On allotment, rupees 2 per share. On first call, rupees 3 per share. On second and final call, rupees 4 per share. The issue was fully subscribed. Ram, to whom 100 shares were allotted, failed to pay the allotment money and his shares were forfeited immediately after allotment. Shyam, to whom 150 shares were allotted, failed to pay the first call. His shares were also forfeited after the first call. Afterwards, the second and final call was made. Mohan, to whom 50 shares were allotted, failed to pay the second and final call. His shares were also forfeited. All the forfeited shares were reissued at rupees 9 per share, fully paid up. Pass necessary journal entries in the books of Fashion Garments Limited. This question was asked for 15 marks. Now, as our usual practice, let us go ahead with first of all making the observations, making basic calculations, and then we'll prepare the journal in the books of Fashion Garments Limited. Now, what are the things I have observed? The problem involves issue of 10,000 shares of rupees 10 each and the issue is at par. There is no premium. The payment terms are divided in 4 parts. On application, rupee 1. On allotment, rupees 2. On first call, rupees 3. And on final call, you are supposed to pay 4 rupees per share. The issue is fully subscribed. There is no under subscription as well as there is no over subscription. It means there is no question of pro rata allotment. There is no need of lottery allotment. There is no question of refunding somebody. There is nothing of calls in advance or allotment in advance as such. There are forfeitures at each stage of issue. Ram shares were forfeited after allotment. Shyam shares were forfeited after first call. And Mohan shares were forfeited after final call. It means at each stage of the issue, there is going to be some or other type of forfeiture. But the reissue is only after making the final call. It means Ram shares are forfeited and immediately they are reissued. Shyam shares were forfeited, immediately they are reissued. Mohan shares were forfeited, immediately they are reissued. Is not the way in which Fashion Garments Limited has performed the entire activity. Instead, after forfeiting Ram shares, they went ahead with first call. Then after forfeiting Shyam shares, they went ahead with final call. Then after forfeiting Mohan shares, after that, Ram, Shyam and Mohan, all the shares forfeited are reissued together. So entire reissue is only after the final call. The reissue is all at once and it is at a discount of rupee 1 per share because the reissue is at rupees 9 per share. So the reissue is all at once and it is a discount of rupee 1 per share irrespective of the terms of forfeiture. Therefore, the amount to be transferred to capital reserve at the time of reissue can be calculated after deducting discount on reissue from the total of share forfeited account, which is made up of Ram's forfeiture, Shyam's forfeiture as well as Mohan's forfeiture. So these are the basic observations. Now let us prepare the simple table for the purpose of analysis of what should be the entry at each stage in the application. There is a chance that some of you may find that they can calculate the amount on their own without preparing the table. But some of you may find it difficult. So I have developed this technique of preparing a simple analysis table before we pass the journal entry. I'll explain the problem with the help of this table. Once that is there clear in your mind, then it becomes easy for the purpose of passing the entry. Passing the entry becomes only the writing part. Calculation part is already over. So let us go ahead with the calculation of the different calls or different money demanded as well as received. First stage is application stage. DD means demanded. So application money demanded is at the rate of rupee 1. on all 100 shares of Ram as well as 150 shares of Shyam as well as 50 shares of Mohan and rest of the people whose names are not known to us who happen to hold 9,700 shares. In total all 10,000 shares, everybody is demanded to pay rupee 1 at the time of application and everybody pays 100 rupees. So application received is 1 rupee. So application received is 1 rupee per share. Ram's 100 rupees, Shyam's 150 rupees, Mohan's 50 rupees and others 9,700 rupees. So total application received is 10,000. Now bear in mind that at the time of application money demanded, the company was not knowing who is Ram, who is Shyam, who is Mohan and who are others. The company just issued the prospectus and asked people to subscribe for the shares. Thereafter, company came to know how many shares are demanded by Ram, how many were demanded by Shyam, how many were demanded by Mohan, and how many were demanded by rest of the people. But for the purpose of our examination problem, I have classified as if the company has demanded money from Ram. It's not the case that a company has actually demanded money from Ram. Ram has subscribed to the prospectus on his own. After he is subscribing, then the company came to know that Ram is one of the applicant, Shyam is one of the applicant, Mohan is one of the applicant, and then the company decided to issue the shares to them. So for the purpose of our entries, the internal columns of Ram, Shyam, Mohan and others are not necessary. The column which is necessary for the purpose of journal entry is going to be the total column. I am preparing these internal columns just for the sake of facilitation of correct amount. The total column is going to be used for the purpose of passing the journal entries. So here you complete application stage wherein the company received application money of rupees 10,000 and the company has directly transferred this entire application money to share capital account because the company has accepted all the applications. Now comes the allotment stage. In allotment stage, the company is going to demand 2 rupees per share. So allotment money demanded. Here now the company knows who is Ram, who is Shyam, how many shares they are holding, etc. So now company is going to make a demand first. Application money or allotment money demanded at the rate of rupees 2 per share. So it will be 100 into 2 is equal to 200. 150 into 2 is equal to 300. 50 into 2 is equal to 100. And 9,700 into 2 is equal to 19,400. In all, the company has made an allotment demand of 10,000 into 2 is equal to 20,000 rupees. Now the amount of allotment money received is on all the shares except Ram. So allotment money received from Ram is 0 and everybody else paid whatever money was demanded from them. So company received 19,800 from Shyam, Mohan and others. Could not receive anything from Ram. So Ram's money will be considered as allotment in arrears or calls in arrears, 200 rupees. So the entry is going to be passed of 20,000, 19,800 and 200. Internal columns are only for the purpose of facilitation of correct amount calculation. Entries are going to be based on the last column. Now comes the first call. First call is of rupees 3. Remember, company is not going to demand any money from Ram. Why? Because it is already mentioned that since Ram failed to pay the allotment money, his shares were immediately forfeited. Immediately forfeited. So it's obvious that if you have forfeited the shares of Ram, you cannot demand call money from Ram. That's why this column is now completely darkened by us. We are going to consider only the rest of the people. So company is going to demand 3 rupees from Shyam. 150 into 3 is equal to 450. Mohan is equal to 50 into 3, 150. And others 9,700 into 3 is equal to 29,100. So total amount which the company can demand is not 10,000 into 3, but it is going to be 9,900. Subtotal of these three, 150, 50 and 9,700 into 3 is equal to 29,700. The company was expecting everybody will pay. But now Shyam has made the mistake. Shyam has defaulted. He's not making the payment. So his amount received is dash and entire amount will be called as calls and arrears. Mohan and others are not defaulting. That means they are making the payment. So amount collected is 29,250 in bank and 450 is the amount of calls and arrears. So here you complete the first call. After this, Shyam shares are also going to get forfeited and then the next call will be made only on Mohan and others. Now we can see that at the time of second call, which is of rupees 4 per share, which we are going to demand, we are not going to make the second call on Mr. Ram shares as well as Mr. Shyam shares because we have already forfeited the shares. But on Mohan's 50 shares into rupees 4 is equal to 200 and others 9,700 into 4 is equal to 38,800. So total call made is 39,000. We were expecting that Mohan and others will pay. But it seems that now Mohan is making a default and he's not making payment. So call scenarios of Mohan are 200. No call scenarios from others. So ultimately amount received is 38,800. Call scenarios are 200. There are no call scenarios now from Ram and Shyam because we did not demand the final call from them. So this is the basic point to be kept in mind, or basic table to be kept in mind. Entries are going to be based on this column. Let us now consider the entries. First entry is obviously for application. Application is going to be of 10,000 rupees received. In application, you receive money first, then you decide whose application is going to be accepted, who is going to be allotted shares. That means the amount is going to be bank account debit rupees 10,000, this amount which is received, to equity share application account 10,000. We don't credit equity share capital account because equity share capital account is a statutory account. Once credited, it cannot be debited whenever you want. It can be debited only when the law permits the same. There are few situations like forfeiture or redemption or buyback. These are the situations where you can debit the share capital account. Otherwise, it is not allowed to debit the share capital account. Therefore, instead of directly crediting share capital account, we are crediting a temporary account, which is not a statutory account. This account is called as equity share application account. Then we will decide which of the applications are to be accepted. Are there any incomplete applications? Then they may have to be rejected. However, in the problem of Fashion Garments Limited, there are no applications having any incomplete information. So all the applications are accepted, all the shares are allotted. So share application account purpose is served. Let us close the share application account and transfer the money to equity share capital account, statutory account. Equity share capital is a liability for the company. It will have to be credited. Entry is equity share application account debit to equity share capital account. You can see the narrations to be written. So here you complete the application stage. Application stage is over. Let us now consider the allotment stage. For allotment, we are not going to receive money first. For allotment, we are going to demand money first. For application, we received money, then we allotted the shares. For allotment, we'll demand money and then we'll receive the money. So amount which is going to be demanded will be from Ram, Shyam, Mohan and others, everybody. So total amount demanded is going to be 20,000. Entry will be equity share allotment account debit. It's a temporary account to equity share capital account because the right to receive is already there. So we can consider that equity share allotment is like our sundry debtor, debtor for a specific purpose, for the purpose of equity share allotment. Not debtor for goods, but debtor for allotment. So equity share allotment account debit to equity share capital account. If they will pay full money, then the next entry would have been bank account debit to equity share allotment 20,000. However, we have seen that Mr. Ram has failed to pay 200 rupees. So the amount to be received is going to be 19,800 and 200 to be transferred to another temporary account called as call scenarios account. Entry will be bank account debit, call scenarios account debit to equity share allotment account. Allotment account temporary account is closed. Bank account money is received and call scenarios a new temporary account is created. That is rupees 19,800, 200 and 20,000. There is another option which is possible for this entry, which I generally don't recommend. This is the easiest approach for the purpose of working the things. If you are happy with the second approach given by institute, you can follow the same bank account debit to equity share allotment account 19,800. So here you can see that allotment account is debited by 20,000 but credited by 19,800. That means allotment account is not closed. It is still having a debit balance of rupees 200. Whereas this entry or this technique is more simplified technique. It specifies that let us close the allotment account and let us create a new account called as arrears account. When we keep only allotment account, we may feel that the money is not yet received because probably the due date has not yet arrived. Whereas when we close allotment account and we create calls and arrears account, that means we give a clear instruction, clear reading to the reader of financial statement that the due date has already passed and these people have not paid, or this much money is still receivable despite of the fact that the due date of allotment is over. Allotment money is over. So it is better to follow the second treatment. You can see the narration by pausing the video. Let me go ahead with the next entry. Now what is going to happen? Since Ram has not paid money, it is necessary for us to forfeit his shares because they have told after every particular default that person's shares are going to be forfeited. The entry for forfeiture is very simple. Equity share capital account debit by the amount called up. To shares forfeited account by the amount paid up. To calls and arrears account by the amount of arrears. Now in case of Ram, we have demanded application money and allotment money. So total amount called up is only rupees 3 per share. I repeat, share capital account by the amount called up. And in case of Ram, only application and allotment money are demanded. We have not made any first call from him. So it is better to consider that 3 rupees is the called up money of 100 shares held by Ram. So entry will be equity share capital account debit 100 shares of Ram into 3 rupees called up 300. To shares forfeited account by the amount paid up. Paid up amount is only application money, so 100. To calls and arrears by the amount of arrears, and Ram's arrears are rupees 200. So calls and arrears account also gets closed now, and another account gets created called as share forfeiture account. So here you complete the position of Ram. Let us now look at Shyam and others. Now since Ram's forfeiture is done, we are ready to go for making the call. The first call is of rupees 3 per share. It is going to be of rupees 29,700. So entry will be equity share first call is a temporary account to equity share capital, which is a permanent account. Equity share first call account debit to equity share capital account. So this is like sundry debtors account, debtors for a special purpose. What is the purpose? Equity share first call, and equity share capital is our liability. 29,700 is the money which is demanded, but amount received is 29,250. Again, institute has given two different options. I would prefer the option of calls and arrears. So the entry is bank account debit 29,250, calls and arrears account debit, which is our asset now. The person is still our debtor. So debit rupees 450, and equity share first call, that special purpose debtor account is to be closed now. So to equity share first call rupees 29,700. This is how the entry for first call made and first call received are passed. Now let us go for the next situation. Since Shyam has not paid, the company is going to immediately forfeit his shares. His shares are forfeited by considering again same entry, equity share capital account debit to shares forfeited account to calls and arrears account, share capital account debit by the amount called up, to share forfeited account by the amount paid up, to calls and arrears account by the amount of arrears. So in case of Shyam, the amount called up is 1 rupee of application, 2 rupees of allotment, and 3 rupees of call. So 1 plus 2 is equal to 3, 3 plus 3 is equal to 6. So 6 rupees are called on 150 shares, that means 900 rupees. To share forfeiture account by the amount paid up, Shyam has paid 150 rupees on application. He also paid 300 rupees on allotment. That means Shyam has paid totally 450 rupees by the amount paid up credited to share forfeiture, and rest of the money is calls and arrears, which is exactly tallying with 450. So this is how you are going to pass the entry of Shyam's forfeiture. Once forfeiture of Shyam is over, the company is now free for the purpose of making the second call. Now second call, remember, it is second and final call. So the entry will be equity share second and final call account debit, special debtor account, special debtor for the purpose of second and final call, to equity share capital account 39,000. The call is only on 9,700 plus 50 shares of Mohan. Then comes the next part. The company is going to receive the money. The company was expecting to receive 39,000, but Mohan failed to pay. That means company will be receiving only 38,800, and 200 will be calls and arrears. Again, institute has given two different entries. I would prefer the second entry. So bank account debit 38,800. Calls and arrears account debit, which is our debtor now, who has passed the due date, 200, to equity share second and final call account 39,000. This is how the entry for Mohan's working is also done. The next part, since Mohan has made the mistake, he has made the default, it is necessary for us to even forfeit his shares. The entry for forfeiture is same, share capital account debit by the amount called up, to share forfeiture account by the amount paid up, to calls and arrears account by the amount of arrears. Now in case of Mohan, 50 shares, we have demanded 1 plus 2, that is 3 rupees, 3 plus 3, that is 6 rupees, 6 plus 4, entire money was demanded from Mohan. So 10 rupees were demanded on 50 shares, that comes to 500 rupees. So equity share capital account debit by the amount called up, 50 into 10 is equal to 500. To share forfeiture account by the amount paid up. Now the amount which is paid by Mohan is application, allotment, and first call. 1 plus 2, 3 plus 3, 6. 6 into 50 is equal to 300. So to share forfeiture account, rupees 300. To calls and arrears account by the amount of arrears, he has failed to pay the last call of 200. So that amount is tallying. That means our entry is perfect. Institute has given second entry also, but I don't prefer that entry. That's why I'm not discussing the same. Let us now consider the next part. If after completing all the forfeiture, the company is going to go for reissue. All the shares, how many shares? 100 shares of Ram, 150 shares of Shyam, and 50 shares of Mohan are going to be reissued. 100 plus 150 is equal to 250 plus 50 is equal to 300. So 300 shares are reissued by the company at the rate of rupees 9 per share. That comes to bank account debit. 300 into 9, 2,700. Share forfeiture account debit, 300. To equity share capital account, that is 300 into 10, 3,000. The discount on reissue is directly debited to share forfeiture account. Now we already know that the amount of share forfeiture on account of Ram was 100 rupees. On account of Shyam was 450 rupees. On account of Mohan was 300 rupees, which we had seen here just now. So the total amount of share forfeiture is 850, out of which 300 are a discount on reissue, which is already debited to shares forfeited. The remaining amount is 550, which is to be transferred to capital reserve. Amount to be transferred to capital reserve means capital reserve will be credited and share forfeiture account will be debited. So the entry is share forfeiture account debit to capital reserve account 550 each. You can write the narration. So quite an easy question, provided you know exactly at which stage which entries are supposed to be passed, when Ram is forfeited, when Shyam is forfeited, when Mohan is forfeited, and when they are reissued. 15 marks question, quite an easy question. 15 marks in your pocket. Now in the last video after this, I'm going to consider question number 6b, which is again a theory question, and thereafter this entire playlist will get over. Thank you very much.